To understand the modern housing crisis, we have to look back at a specific baseline: Seattle in 1999. At the time, a newly built 3-bedroom townhouse in the city cost about $150,000. Today, that exact same townhouse sells for roughly $700,000. If the price had strictly followed the Consumer Price Index, it would be worth about $300,000. This leaves a $400,000 gap, a speculative markup sitting 133% above inflation. When the expectation of infinite appreciation decouples housing from the rest of the economy, it effectively locks out the working class from ever owning the roof over their heads. What would happen to the American economy if we passed a law tomorrow that legally deleted that speculative value? Imagine that a nationwide law is approved tomorrow, capping the allowable resale profit on every home in the country. Under this proposal, the maximum sale price is the original purchase price, plus inflation, plus closing costs, and a final cap of 25% capital gains. To maintain the housing stock, owners can add the inflation-adjusted cost of documented improvements and major repairs back into that base price. For our Seattle townhouse, the legal sale price would immediately drop from $700,000 to just $405,000. Existing homes would become accessible to average earners again, and property taxes would decrease as assessed values align with these new price caps. However, drastically lowering the price of a scarce resource usually triggers a massive spike in demand, which traditionally ruins any attempt at affordability. In a typical market, high demand leads to bidding wars that would quickly push that $405,000 price right back up to its previous heights. But because the cap is legally enforced, a bidding war literally cannot move the price past the $405,000 ceiling. This prevents wealthy buyers from simply using their excess capital to outbid families for older, existing homes. If those buyers want a premium or custom property, they are forced to take their bidding pressure to home builders instead. The law acts as a funnel, taking the wealth that used to inflate the price of old assets and forcing it to fund the creation of new housing supply. Let's step forward and look at the actual long-term results after 2 full decades of this policy being in place. This sustained redirection of capital creates a long-term construction boom as builders race to meet the demand for new, uncapped properties. Over time, the focus of the market shifts from competing over a limited pool of old houses to consistently expanding the total housing stock. This stabilized environment begins to mirror a commodity market, like the one we see at a car dealership. New products are the expensive, premium option, while used assets naturally become more affordable as they age. Our current system is broken because it provides a massive financial reward for simply owning a decaying structure rather than producing something of value. Affordability will remain out of reach as long as we treat basic shelter like a high-growth stock portfolio. But the crisis is a policy choice. By restricting speculative profit, we can flip the incentives of the entire market from hoarding to building. Legally removing speculative pressure allows us to stop treating real estate like Wall Street and return housing to a basic commodity designed for people to live in.